Curtis introduced us to this gentleman who has years of experience managing traders, working with traders. And I dare say it's probably one of the best hires, or, you know, I don't even call it a hire, I call him teaming up with our family. It's one of the best hires we had because he oversees our grow piece. And he hasn't been with us long, so you're going to see not today, not just in this first presentation, but in a second, the program that he's put in place to grow our business. And I believe what's even more important, you're going to see by the results. So get up on your feet and let's bring Chima up on the stand. Chima, come on up.
Blue told me you were
He's out there
money one night, 30 mil for one fight.
Thank you. Good morning, everybody. How you feeling today? Awesome. It's great to be here. Really, really excited to meet everybody. Can I ask my traders to stand up, please? Can you give these guys a round of applause? So proud of my guys. Thank you, thank you. I want to start a conversation. Today, I really want to begin a conversation. Anthony spoke about this, Rick spoke about this. It's something that is very important that has helped me in my career. And I want you to become what we call a resident expert. It's so important, it's vital for you to build your business by becoming a resident expert. How do you become an expert? You have to put in the time. You have to put in the work. It doesn't come easy. And this financial game is a little tough, to say the least. How many of you feel Wall Street makes a lot of money? They're known for it, right? Do you think it's easy? You think you just wake up one day and be a big player on Wall Street? So we have this concept of bringing Wall Street to Main Street. So imagine that job that we have. You have to go out into the field and actually communicate that to the people that you're trying to bring in or recruit to the business. So how do you become a resident expert in bringing Wall Street to Main Street? You have to understand Wall Street just a little bit more. So let's do that today. What does that mean? Bringing Wall Street to Main Street. You really have to focus on what does Wall Street do in order for you to communicate that and not over-promise. It's big. How many of you know this guy? All right, so he has a lot of quotes that I love, and one of the best quotes I feel is this one. And this is really the emphasis behind the simplifier. If you don't find a way to make money while you sleep, you will work until you die. Period. End of story. So that's the emphasis behind the simplifier. Are you guys excited about the simplifier? The idea is for you to make money while you sleep, for you to find a way to duplicate yourself. How many of you heard the term, if I could only recreate myself, if I could only clone myself, I could do more work, right? I could do a few more things in a day. I can run errands, I can pick up the kids, I can go to soccer practice, I can do all those things. And we figure out a way to just run ourselves into the ground, as they say. But Wall Street does it a little bit different. Look at this chart. I want you to see this chart. How many of you have heard of the top 1%? You've heard that term before? What does that mean, top 1%? The very, very, very wealthy, right? Well, some of you agree that they get it right. They find a way to get it right. They're wealthy for a reason. They figured it out. In 2001, all the way, let's go up to 2007, the top 1% owns 38.3% of stocks. The top 1% own 38.3% of stocks. So let's even step it up a bit further. The top 20%, all right, so let's say that's Wall Street. The top 20%, they own 52.8% of all stocks. Let's round that number to about 90%. The top 20% own 90% of all stocks. Why is that? Why is that? Can you imagine? That means Main Street, the rest of us, right? The 80%, we only own a mere 10%. Think of that number. The top 20 own 90% of all stocks. Let's dig a little deeper. IBM, Google, Facebook, Shell, BP, those are all what? Companies. What do they do every day? The employees who go to work for them every day, what do? They work. They make money. Their job is to go to work every day and make money. That's it. So what do the rich do? They clone themselves. They use their money and they invest in companies. And that's how they create that multiple stream of income. Because the Main Street concept of multiple streams of income is I got to go out and be an entrepreneur in 5 different companies to become a millionaire. And that's the Main Street mentality. But the Wall Street mentality is I'm going to use my money and I'm going to own companies that go to work for me. Does that make sense? All right. Are we getting it? Are we starting to get it? So today is a conversation. Today is really just a matter of us looking at the way they do it and figure out a way for us to duplicate it. Does that make sense? I don't have to recreate the wheel. I just got to recognize the right wheel to follow. All right? So if the top 20% own 90% of all stocks, and I find myself in the 80, right? Why do we only own about 10? And I'm giving us a couple more, right? It's really 8.9. We don't get it. The concept isn't there, all right? So now let's step forward. Let's continue the conversation. The top 20%, they have access to different types of investments. Because I've heard that conversation before. Well, how do I play in the game? I just don't know how. They don't make it easy for you. How many of you have heard of a hedge fund before? Hedge funds, right? We've heard of it? Do we know what it is? Yes. All right. Hedge funds. Basically, it's a pool of money where investors invest in different types of investment vehicles. It could be securities, it could be businesses, it could be anything. All right, so we know what hedge fund is. How do we play? How do we get involved? Well, you got to be one of these. You got to be an accredited investor. Has anybody heard that phrase before? An accredited investor. How many of you feel that you're an accredited investor in this room? No hands. All right, this is what it is. In order to play where the big boys play, you have to have an annual income of an individual of 200K, joint 300, net worth of over $1 million. That's the reality. That's how the rich stay rich. Because Main Street doesn't look like this. Main Street does not look like this. So how do we move forward? How do we break into that top 20%? How do we make a difference in our life, in our children's life, the next generation? Why are we even working this hard? When they talk about the leaders and the generational wealth that they're creating, it's impressive. Hard work, you can't fake it. Any industry, you just can't fake it. Basically, this is what it is. Can everybody read that? No one apologizes for that. Wall Street doesn't apologize for you. If you don't have the money, you just can't play. No one cries a tear for you. Believe me when I tell you. All right, so hedge funds, we know they make money, right? Can everybody say that? We know hedge funds make money, or at least we think they make money, for the most part. All right, how do they work? There's a concept called 2 and 20, and that's how they get paid. So I consult with various hedge funds, private equity groups, things like that, and they make money. So a 2 and 20 means that 2% off the top is theirs. If you're an accredited investor, and if you come, and if you get invited, and if you follow this, okay, yeah, well, great, come on in. You give me some money, I take 2% off the top, just for saying hello, just for coming in the door. 2% of your hard-earned money is just gonna come in the pocket. Thank you very much. Next, charge you a performance fee. 20% of what I make for you, I keep. Period. End of story. That's what it is. Thank you for doing business, See you next year. Invite your friends. That's how it works. All right, great. What do you pay here at WG? Oh, $150. Let me cry about that. Wow, look at that. You mean you have an opportunity to even get it for free by just telling 3 people? And we can't do that. Really? This is about understanding Wall Street and Main Street. So if you want to play, believe me, if you get someone like myself or some of our traders over here that work for funds, they get paid a lot more than what you're looking to pay right now, right? Which is free. All right, let's continue the conversation. So for example, if you have $1 million, and if you come into a hedge fund, all right, you're coming with something significant. And that's going to be locked up for a certain period of time. That's what they call a lockup period. So let's say you have $1 million, 2% off the top. Thank you very much. Operational costs and things of that nature. Golf club fees. Yes. And then if I make you 100K, I take another 20%, 20K, right? Great, awesome, good year. Very happy about that. How much are you paying again? How much are you paying? Free, right? Free? Okay. That's why I ask my guys to stand up. You have no idea how difficult it is to execute a trade. How many of you work or have worked in professional industry before and you get evaluated how often? About once a year, right? Everybody? About once a year? At best, probably twice. I have friends, colleagues, and things like that. We talk about that. They slack off maybe February, March. By the time December rolls around, their boss, supervisors forgot that they slacked off February, March. They still get their bonus or their increase or whatever the case is. Hey, great year, good job. Guess how often my traders get evaluated? Every day. It's black and white. You made money or you didn't. Period. How many of you have executed a trade by yourself? Okay. Made money, lost money? Okay. Here we go. So you lost a little money, but you kept that inside, huh? Nobody knew. Right? All right. I hear you. It's called a conversation. That's it. My guys, when they trade, guess how many thousands of people see? You think it's easy? You think you can step into my shoes? You think you can step into their shoes? Do you really? I ask you one thing. When you see these guys, shake their hand. Just say thank you. You could buy them a drink too if you like, but because you don't have to deal with the 2 and 20. All right, let's see how we compare. The objective behind a hedge fund is to beat the S&P. Most hedge funds use this as a benchmark because the S&P is a grouping of about 500 stocks. And the idea, and this is what they call an index, and if you can beat this benchmark, then I invest with you because you're a stud. You can kill it. I like you. I like your trading style. I like the way you approach the market. I like the way you view investments. So if you can beat this benchmark, and since the inception of the S&P 500 since 1928, it's averaged about 9.5%. Guess what, guys? A year. The last 50 years, it's averaged 9.6. The last 10 years, how much? There you go. Annually. All right, so you just got to beat that. Open a hedge fund, beat this index, raise money. So let's see what they do. These are the big dogs. This is from Bloomberg, and this is what they're doing. Hedge funds over $1 billion. You know how much money that is? It's a lot of money. Number 1 on the list, returned how much? Can everybody read that? 51, let's say 52%. Number 2 on the list, about 47%. Impressive, right? Did they beat the benchmark? By a little or a lot? How you feel the next round of fundraising is going to be next year? Oh, yeah. Because you see, like Anthony mentioned, just show them a phone. That's what they're going to do. Hey, look at the work. That's how it works, right? What kind of traders you think trade for these groups? The best. You know why? Yeah. You can see it. The results, right? All right. Let's look at my guys. Let's look at my guys. When we talk about our equity group, and they don't get enough credit because forex is so sexy. I know, it is. However, money is money. We grow here in both sides of the business. If you have money and you're not diversifying, how many of you heard that word? Diversification. And you're not diversifying and using all of our products like Anthony mentioned, you're missing the boat. Now, this is ROI. This is what they call return on investment. So it's a huge number, 828%. Now, how would that relate to your account? Let's say if you had an account of $10,000 and you risk 10% per trade, your account would have gained over 80% that year. Is that impressive? Did that beat the hedge fund that you just saw that got 52%? So on your account balance, you would have made over 80% for the year. Let's meet the guys who's responsible for that. Can my equity group come up here? We have Corey, Darren, and Dave Bush. Can my equity group come up here? Can we get a round? Thank you, thank you. Great job, man. Great job. Great job. Thank you. When you see them, they're killing it. They're killing it. You are our hedge fund. We take this job very seriously. We know that we work for you. WG is our client. We take that very seriously. Trading isn't easy, as we mentioned. Every trade isn't won. But there's passion behind what we do. There is courage behind what we do. You see every trade. You see every scar. In the hedge fund world, they don't see that, in all honesty. Clients don't see every trade. That's the reality of it. They just don't see every trade. They see the returns quarterly. You see it every day, minute by minute. My phone rings. Leaders call. Hey, what's going on? I'm like, oh, slow down, man. It's okay. The idea is over time, right? Over time, you will see the results. You can't live and die on every trade. And just like these traders can't live and die on every trade, you can't. All right. Thank you, guys. I'd like to bring up my forex group. All right, forex guys, can you come up for me, please? We have Dave Bush again, Dave Taggart. All right. We have Javier Rios, JDR, Josh Sanchez, Xavier Phillips, Alan Pisano. Alan, where are you? All right, there we go, Luke. Thank you. This is what their numbers look like. There we go, 60% over the last year, guys. And that's the return on your account. That's 60% on your account over the last 3 months. We're looking at 35%. This is what it looks like in pips. right? Oh, let me back up here. I think, all right, so, oh yeah, all right. So yeah, here we go. 12 months, 1807, the last 3 months, 1057, and this month, the current month, it's not even over yet, right? 295. There we go. All right, so these are the guys who are responsible for that. Please keep that in mind, everybody. It's over time, it's an average. This is what we're looking for. We're looking for, right? We're looking for this over time. It's not day by day, trade by trade. You can't live day by day and trade by trade. You have a unique vantage point to see these trades. And it's a roller coaster ride that, trust me, you don't want to be on. You're on it, you see it, put the phone down every now and again. Look at it maybe once a week. If you can stand it, once a month. There you go. That's how it works. But if you want to ride that roller coaster, you're going to have a hard time. But over time, you will make money. And the results speak for themselves. This is a conversation. You don't have to shoot over the moon. To sell this product, it's easy. You don't have to hit a home run when a single will win the World Series. The expectations that you set are vital, is critical. Because with the right expectation, we don't have an issue, right, with retention. And the retention gets you paid. So we do our job, you do yours. All right, everybody, thank you.